Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a great and amazing day today. Now in today's video, we are going to be talking about how to swing trade with a full-time job. We're going to be talking about tips and tricks that I've used when I transferred from working full-time to becoming a swing trader. So guys, I hope you guys all enjoy it. If you guys don't know who I am, my name is Carter and I've been a full-time swing trader for about 6 years. And exciting news, we just released a brand new swing trading course. And I know when people think of courses on YouTube, they cringe, but I'm telling you, we talk about the strategies I use each and every day that I've used for over 6 years. We talk about how I trade, how I find stocks. There's quizzes, live streams, lectures. It's your one-stop shop for all of your swing trading needs. Invest in that education. Check it out. You guys can use code YouTube to get 20% off, but only for the next 10 people. So check it out down below. But guys, let's dive into this. Let's go. All right, so what is swing trading? Well, in simple terms, swing trading is when you buy a stock, you hold it for more than a day, but less than a year. Now, when you buy and sell a stock during the same trading day, that's considered day trading. Now, day trading, on the other hand, is something that is very difficult to do with a full-time job. It requires a lot more time involved with your trade because you could be holding a trade for minutes or hours. And so, you have to be in tune with the market each and every pretty much hour of the day. Now, swing trading, on the other hand, is a little different. And the reason why is because you're buying a position that is severely undervalued or possibly on a support line, and you're selling it at a higher price. Now, on average, I do hold my swing trades anywhere from a week to about 14 days, depending on the stock and the strategies I'm using. Now, the great thing about swing trading is you can do it with a full-time job. Now, when I first started swing trading, honestly, I did it completely wrong. I funded a Robinhood account and I started trading that same day. Now, obviously, that's a recipe for disaster, and before you know it, I burned through an account. It was about $1,000 worth of money, but that $1,000 taught me a very valuable lesson. And this brings me to my first lesson, is paper trading. Now, the biggest thing when it comes with swing trading, in general, is paper trade. Paper trading is using simulated money to get started with swing trading. And a lot of people think that this is something only beginners use. No, I continue to paper trade even today, and I've been doing this full time for 6 years. And the reason why is because, as the stock market changes, my strategy slowly changes. Now, I don't want to throw those changes with a funded account and lose money. So what I do is I practice with my paper trading account. It's a very easy way to continue to learn, continue to invest in that education, but for completely free. And I know you might be saying, Carter, well, this has nothing to do with swing trading full time. Actually, it does. A lot of people have this association that swing trading is an easy way to get rich quick, and I'm telling you, it's not easy. It's actually very difficult, and you have to have an edge, and you have to practice. It's like a doctor trying to become a doctor, or an engineer trying to become an engineer. It takes years of practice and hard work, and you have to treat it like that. You cannot think of this as an easy way to get rich quick, and a lot of people that are working full time, I'm telling you, are looking for that easy path, and trading might not be the best option. And that's why paper trading is a very easy way to start practicing and learning those trades. All right, this brings me to tip number 2. Now, this is probably the most important thing, is being prepared. Now, as you develop that strategy with your paper trading account, what you're going to be doing is you're going to be understanding your entries, your exits, and your stop loss. Those 3 things are going to be very important. And the reason why is because if you have a bad entry, you're going to lose money. If you have a bad stop loss, you're going to lose money over the long run. If you have a bad profit or exit, you're going to lose money. Those 3 things are super important. But the great thing about, trading platforms, especially like Moomoo, the one I use, is you can pretty much preset all of those. You can preset your stop loss, meaning you just add your stop loss in on your order. You can add your profit, so when it hits a certain price, you can pretty much sell your shares, and you can add a certain price you want to buy the stock, which is awesome. That's something called a limit order rather than a market order. Overall, being prepared and having all those already preset before maybe you start your day with the full-time job, that's what I did. Is I had my entry preset, my stop loss preset, and that's what I did. Is I had everything all preset. I had my stop loss, my exit, and my entry all preset before I even started working my full-time job. So if the stock sold off to a support line, I would buy it on that limit order. If it continued to sold off, I would get stopped out. But if it rallied up, then I would hit my profit and I would sell my shares. Now, obviously, you do have to make some tweaks throughout the market day, and that's why having a little flexibility with your job definitely goes a long way. But like we said earlier, you're holding these trades for several days, so you could possibly do it after work, or maybe if you work nights, you can do it in the morning. You know, you just have to be a little involved with it, but it's not super heavy. Another cool thing that I would recommend doing is setting alerts. Now, virtually every single trading broker, like the one I use, Moo has it, TD Ameritrade has it, but setting alerts are another great way to stay involved with the market with the full-time job. So maybe if you have a job that you can actually glance at your phone for a couple minutes, you can set an alert and it will notify your mobile device. So maybe if a stock sold off, you can pull it up, look at it, and see if you want to make that trade. Okay, the next thing that I would recommend doing, especially with a full-time job, is just start small. You know, if you're looking to replace your income within a month, you know, of swing trading, no. Honestly, what I would recommend doing after you paper trade and you understand, you know, the type of strategy you have is start small. Start with $100, $200. And the way I always phrase it, if you're making $1 a day from swing trading $100, you're gonna make, you know, more money. The only thing that's separating you is share size. So if you put $1,000, that $1 a day could turn into $10 a day. And then if you put in, you know, a couple $1,000s, that $10 could be a couple $100. You know, with swing trading, the only thing that's separating you is just that account size. So you just have to really focus on that strategy, because strategy is gonna be a lot more important than your account size. All right, the last thing that obviously I would recommend doing is constantly learn. You're gonna lose money. We've all lost money trading in the market, but what separates winners and losers and the people that are successful traders is they learn from their mistakes. Now, with that being said, learning from your mistakes, you have to review those trades. If you lose money, look at that loss as a little lecture. You know, you pay to go to college. Now, when you lose money, that taught you something and you paid for it. So always go back, review your trades, see what you did right, see what you did wrong, and see if there's a way to improve your trading strategy. So guys, I hope you guys all enjoyed this. If you guys did, hit that like button and subscribe. Don't forget to check out my swing trading course, and we'll see you guys tomorrow in the next one. Take care, guys.